Hello, good day, everyone. Welcome to Deloitte's Debrief Tax webcast series in Asia Pacific. Our webcast today is from our corporate income tax series and it's titled E-invoicing compliance for APAC Part 2. The topic is regarding latest regulatory updates and insights on managing e-invoicing project. My name is Siu Yong, and I am a director based out of Deloitte, Singapore, and we have the pleasure of hosting today's webcast. With us today will be Richard. Richard Mackinder is the tax partner based out of Singapore as well. We also have Raymond. Raymond Lam is managing director of Asian. Segi is the senior account executive, and both of them are from Pagero. As you can see on the slide here, this is our bio shown on the screen. Before I introduce the agenda for today's webcast, I'd like to take a moment to highlight some of the features of our webcast console. First of all users are on listen-only mode. If you have any content-related questions, you may submit at any time in the Q&A box at the bottom right of the screen. We do our best to respond to your questions during presentation. Second, all PC users can maximize or minimize each box at your convenience during the webcast. You may also explore the icons at the bottom of the screen. If you want to download today's slide and related publication, please go to the downloads and links box. On the other hand, mobile device users can view the slides and answer the survey on screen. Lastly, if you require an attendance record for this event, you will receive an automated email with CPE certificate after watching for 50 minutes. Okay, if we move on to the next slide. So as mentioned before, today's webcast, we will then cover the latest APAC regulatory updates on Singapore, Japan, Philippines, Australia, and New Zealand. We will then move on, focusing on the Malaysia e-invoicing mandate, mainly around the lesson learned from the phase 1 go live, which is 1st of August. Then we will move on, sharing as well how you as an organization can prepare and manage an e-invoicing project. And then lastly, we will then have the virtual panel for discussion on frequently asked questions. If we move on to the next slide. Now, just an overview about Pagero. As you might be aware of, Pagero is a global provider, provides a smart business network that connects buyer and seller for automated and compliant exchange of invoices. Now, the global e-invoice exchange covers all the countries, as you can see, all the dark green color, over 140 countries. Now, e-invoicing has been working on this market for a long period of time. It has been serving a lot of clients across the organization across the world as well. If we move on to the next slide, before we deep dive into the next section, an overview for you as well in terms of the mandates across the world. As you can see, as of 2024, there are countries as listed here across the year. And obviously, Malaysia was then one of them in August this year, 2024. Across the horizon, you can see there are a lot of countries that are up with the upcoming requirements. Some of them are mature than others, but definitely a lot of them are also within the APAC region. One of the key highlights that we want to share as well for Germany, although it's not in the APAC region, but definitely want to bear in mind because the go live date is January 2025. A lot of organizations are getting ready as the requirement is then to have e-invoice exchange across the organization within Germany. With that, let's move on to the next session. section, and I'll pass it on to the Pagero team, Raymond and Sergey, please.
Thank you, Suriel. Okay, before we could jump into Singapore or specific updates from APAC regions, let's quickly recap part one that we did in April. Yeah, my colleagues Naza already outlined the key concept of e-invoicing and CTC models, covering the distinctions between the various approaches, such as the fourth corner model, the real-time reporting, the clearance system, the centralized exchange, and the decentralized CTC exchange, also known as fifth corner model. So today, as we focus on APAC part two of this series, you will see almost all these models in practice and its latest development, with the exceptions, of course, on the centralized exchange, which is less prevalent in the region. Again, I just want to emphasize again the primary motivator for e-invoicing adoptions by tax authority across some of these countries is reducing tax gap or frauds. Hence, the clearance models is used. However, do take note, alongside of the broader government initiative is to mainly pushing for digitalizations, the efficiency and standardizations. So I highly recommend you downloading the recording of part one to watch if you haven't already. All right. So now moving on into specific to Singapore, quick background. They are the first non-European jurisdictions that implemented PEPO in Singapore, which has been rebranded to Invoice Now since the start of 2018 and officially launched in 2019. Running this nationwide initiative via IMDA, hence started since then four-corner interoperability between the trading partners. Fast forward that we are now in 2024, with currently more than 60,000 enterprise in Singapore has already adopted PEPO, which again, or Invoice Now, the rebrand name, and we have been one of the forefront involving with IMDA since 2019. So what is the change now that's coming? Yeah, starting from May 2025, adding the fifth corner to IRAS. And what it does is, upon distributing the e-invoices to and between your trading partners, the taxpayer via an accredited service provider in Singapore will also send this invoice data to IRAS. Not so much for clearance purpose, unlike Malaysia, but more on capturing the indirect tax GST informations, both from the output and the input of GST. So in terms of timing-wise, quick recap is 1st of May 2025 is the soft launch for all GST registered businesses can voluntarily adopt the GST Invoice Now requirements. So the mandatory does kick in 1st November 2025 for newly incorporated companies that voluntarily registered for GST. The second wave of this mandatory kicks in on 1st of April 2026 for all new voluntary GST register, regardless of incorporation state. Yeah. So as of now, this is the timing that we got. There will be more information in subsequent after 1st of April 2026 as well. So there are two main drivers driving this approach. The key update or message that we want to portray here is, firstly, is the compliance is to IRAS, and it has to be through an access point or service provider on the PEPO or Invoice Now with PEPO ID to transmit the invoice data. And the second driver is the automation is governed by IMDA through PEPO framework in exchanging of the invoices to your buyer. Again, the emphasis is on digitalizations, efficiency, and standardizations. The latest development here is that all service provider or access point who has already been part of the PEPO journey with IMDA has now already received the necessary technical specifications in September 2024, which is just last month, to address the C5. And work has been started to build into our platforms and has to be completed anytime before 31st of March 2025, which is ready for the soft launch that is coming in May 2025. Okay, so the scope of the GST invoice now is, of course, standard rated, zero rated, and for those in B2C businesses, numbers are being aggregated, and also expenses incurred, such as petty cash, will be based on aggregated numbers as well. Okay, so next slide, just to highlight a bit more on, we can move on to the next slide to on the benefit in doing so. So on the left side, you can see the invoice now that kicks in 2019 is to drive reducing cost efficiency, right? And also preventing human interventions. But when it kicks in, the GST invoice now, the benefit is really to further reduce compliance costs, which in relatively shorter audits by the IRA side, faster GST refunds, reliable data, and of course, there's a new value-added services that will be on top of this there will be added alerts on wrongful GST charging. Okay, so this is related to Singapore. So next, we move on to Philippines. The next slide. So on Philippines, it is a real-time reporting. The second model we had described in part 1 series of the webinar. So Philippines study closely from South Korea and adopt similar model as well. Officially mandate in place since October 2022. However, in reality, the BIR, which is the Bureau of Internal Revenue, during this pilot phase, create a patch of taxpayer. 100 of each of them, focusing on large taxpayers to be onboarded every 6 to 9 months. To be included in the batch, you should have received an invitation letter from BIR, the tax authority, specifying that you should initiate onboarding into EIS, which is their electronic invoicing systems. A taxpayer in scope should report sales data provided to the EIS within 3 calendar days from the invoice issuance in the mandatory JSON format. So that is what has been addressed since 2022, and the first step is towards a more extensive mandate. Unfortunately, since then, the pilot programs has been suffering setbacks that have been made to the future of the program uncertain. So as I said early on, the initial plan was to onboard 100 large taxpayer for the pilot, and then transitions to encompass following taxpayer groups that are addressed, that are from the export of goods and services, taxpayer that is involved in electronics commerce, and also other large taxpayer in the services side. However, the pilot has been experienced setback concerning taxpayer onboarding and technical difficulties with maintaining the EIS platform, which has been a lot of bugs and errors and downtime. So on 15 November 2023, the BIR has already issued an advisory to all stakeholders of the EIS platform that the platform is experiencing problems and effectively pausing the pilot until further notice. So hence, if your company do or still receive an invitations letter from BIR, do reach out to us if you need further help related to Philippines. Okay, moving right along on Japan, which is the next slides. There's not much new updates, but I would like to share here still on some of the misunderstandings surrounding qualified invoice system, which has replaced Japanese invoicing system since October 2023. Hope today clear up some of this doubt, which is the qualified invoice system is not an PEPL. Yeah, it is a system for taxpayer companies in Japan to start reflecting data information when issuing invoices, fulfilling the certain conditions in order for the buyer to claim input credits on tax. What it does mean that when Japan Digital Agency, the JDA, roll out PEPL for Japan, PEPL will be able to facilitate the exchange of such qualified invoices information electronically, digitally, and standardized across all issuer of the qualified invoice, fulfilling both the qualified invoice format requirement and in automated ways, thus again creating efficiency and less human interventions involvement. The second area that I want to give everyone an update here is really on archiving as well in Japan. In the past, it has been very common archiving on hard copies. However, from January 2024, is no more allowed for certain documents such as invoices as well. So in other words, once businesses receive an e-documents or e-invoices, including downloading from the cloud or receiving via email, they must archive it electronically instead of printing it and storing it into a paper form. So with that said, next I pass the remaining time to Sagi to speak about ANZ. Yeah, thank you. So we have a poll here now before we move into ANZ. Yeah. So what is your organization current approach to e-invoicing? So hopefully everyone can select one of these choice here that your current approach to e-invoicing. So we can see this, the current approach for e-invoicing have different invoicing provider in different countries. Yes, I think there's no surprise to us to see how is going on this poll here. We don't have invoicing provider that we're looking for one. Yeah. Thanks for submitting your poll. We'll look at it into it further down the road.
Thanks, Raymond. Yeah, and just to quickly comment on the poll here as well, there's some more results added, but it does seem that there's a bit of a mix between everyone, and not unusual to see different e-invoicing providers in different countries, or not having one just yet. It's your first time needing to adhere to some compliance requirements, and learning about it still. Whilst there's quite a lot of countries that have e-invoicing requirements, it's still a growing topic, and I think that kind of leads fairly well to the next slide, please, for Australia and New Zealand. So in Australia and New Zealand, we did cover it in part one, and I'll just quickly touch on that again. So Australia and New Zealand have had PEPL as the format for e-invoicing, and they implemented it actually shortly after Singapore. And now they are going in line with Japan and Singapore and upgraded to the PINT or PINT format, depending on how you like to pronounce it, which allows for international invoicing, so invoicing between different countries. So you would be able to invoice via PayPal, say from Singapore to Australia, from New Zealand to Japan. And it is governed by, the PayPal framework is governed by the ATO and MBIE, so ATO in Australia and MBIE in New Zealand. And both countries have really accelerated the adoption over the last few years. So whilst it's currently voluntary for businesses to adopt, both countries have been working directly with small and medium businesses, especially via the software providers. So your suites like Xero, Bio, QuickBooks are e-invoicing enabled. And they've been working a lot with tier one businesses as well, making sure that they are e-invoicing capable to send and receive. Now, to touch on Australia first, specifically, there's currently over 135,000 business entities registered, and all of federal government is set up. State government and local government is still under adoption, but there's already 300 plus agencies enabled. And one really fantastic initiative from the Australian government is offering 5-day payment terms. They are mandatory for government agencies when suppliers send e-invoices. So a great opportunity for a lot of suppliers. We've seen quite a few suppliers to government really take advantage of that and improve the payment terms for themselves. Now, in this year's federal budget, actually, the government allocated $23.3 million additionally towards e-invoicing in Australia. And really the key initiatives they're looking to drive is to make it expand at scale. One is by ensuring that you increase readiness across government. You increase the readiness across the service providers and third-party applications. And they're actually promoting targeted activities to increase adoption. So proactively registering customers to e-invoicing. They have a large business champions group to lead by example for other businesses. And they're also trying to work on policies to embed e-invoicing as the default channel between business and government, as well as exploring policy for economy-wide adoption between business to business, so potential mandatory e-invoicing in the future. And in terms of New Zealand, there's over 21,000 business entities registered. They're currently in the process of expanding e-invoicing across both accounts payable and accounts receivable through government, and trying to extend it to even more agencies, to 140 agencies. And they have quite ambitious targets for e-invoice receiving as well. And with that, I'll pass you back to Su Yong.
Thank you, Sagi. And what we basically have in this section, it's really deep dive into the Malaysian mandate. And for this section, I'll then have also Raymond to jointly go through this section with me. So maybe Raymond, you can then sort of elaborate the updates on the Malaysia mandate, and I'll focus on sort of the lesson learned based on the implementation work that we've done with our client as well.
Yes, thank you, Su Yong. Yeah, I won't talk about too much detail about Malaysia in terms of the timeline, as I know that is already kickstarted in 1st of August 2024. And now we are working towards the January 2025, and then the last for all taxpayer July 2025 as well, right? And there is some exemptions going on for those who are not reaching more than 150,000 ringgit are exempted from this invoicing. But there's some condition on that, but we can look at that as in the guideline. But what has been updated since the part one discussion is really the government on towards the end of July, just right before we go live. There was this grace period provided, and note that this grace period does apply to all phases. However, it does not mean that you do not do e-invoices during this grace period. Yeah. So just to highlight again, the misconceptions of this grace period is not to do nothing, but rather it's not a deferral, but rather a 6 months period is to simplify the e-invoices, widen the scope in doing so through a consolidation e-invoices, which means that particular of e-invoices issued during this period, the 6 months, must still register with IRBM on a monthly basis, but the difference is through a consolidated way rather than individual invoices that sent to the clients with the QR code. So that is not necessary during this period. True that the businesses are compelled to issue transactional e-invoices, but customers still need to be given the receipt as well. So that practice still going on. It's just that not require e-invoices. Failure, note that also failure to perform console e-invoices will means that the result in possible penalty as well. All right. And the other things to take note as well is since last year till now, there is already e-invoices guidelines and specific guidelines that issue up from LHDN. There is already a latest guidelines that is now already released, very recent, which is the latest 4.0 for e-invoicing guideline and 3.1 for specific guidelines since 4th of October 2024. So that is the latest. So there are many changes, ongoing changes that's coming up. So do take note and make yourself available on all those in LHDN website. Do you, Serial?
Yeah, and if we move on to the next slide now, obviously, as Richard mentioned, sorry, uh, so as Raymond mentioned, the first wave of go live was 1st of August, which is a couple months ago. Now, what we've then seen as challenges and definitely a lesson learned from the wave one taxpayer wave one projects are mainly around master data. As you can see on this slide here, we've summarized it on the 5 key lesson learned that we think that it will be useful to be shared with you today. The first one, as mentioned, it's the master data. It's the completeness of master data and the availability of these master data that are required within the e-invoicing mandate. If you look at the mandate across the Asia Pacific, but also across the world, there will be a set of data that are required from the tax authority. Now, being able to prepare upfront and get these data to be completed upfront would actually be important and will then promise for a successful implementation. The other thing that is specific for Malaysia, it's the requirement on the QR code. As you might aware, one of the requirement by the tax authority for Malaysia is to then include the QR code in your commercial invoice, which means that that QR code needs to be clearly printed. However, during the implementation, because of the challenges from the taxpayer to then incorporate that QR code, therefore there is this grace period that was shared as well. And that it's also one that we've seen our client has difficulties to convert it into that QR code to then make sure that none of the pixels are being missed when it's printed. The third one is around clear communication. as for any implementation, especially on the e-invoicing, because it's not just a one stream, it's not impacting only one stream, impacting multiple stream, impacting multiple system as well. Therefore, a clear communication across the different stream, but also different impacted or responsible party. It could be in a situation that the client, you, for example, will then be working with the provider, such as Pagero, and also working with the consultancy firm, like as Deloitte, for example. So a clear communication between all the relevant party is definitely crucial. Now, the fourth point that is again more specifically for Malaysia is around the imported service tax. You might be aware that the requirement for Malaysia is not just on the outgoing transaction or outgoing invoices. There are also incoming invoices that needs to be reported as well. And the requirement from LHDN is to then ensure that there is the import service tax to be included within the data file. So during these implementation, there were a lot of questions from the taxpayer, now realizing that this is something that they might have missed previously. Lastly, on this five key takeaway from the Malaysia e-invoicing, it's around the awareness. Yes, from LHDN, the information has been shared quite some time ago, but there was still a lot of clients that think that maybe they don't have to do anything until the later wave, for example, and requesting information both internally but to also externally to other taxpayer, because you need more information now. For example, the TIN number, these were not properly received, and therefore the awareness session will definitely be one of the key topic that we want to highlight as well. Now, this is based on the implementation that we work with our client. However, Raymond, on the solutioning side, would you be able to also share some of the lesson learned from implementing the Pagero solution for Malaysia invoicing?
Yeah, indeed, Sirion. Just hover around the last point here, right? Awareness and timing of the implementations. But we've seen that clients, towards even the final milestone of, during July, they say, hey, I need to go live by 1st of August. So always start early. It has been a very challenging from be a provider or advisor or you as a company to say, hey, let's be realistic, go live on 1st of August. And hence that developed the first point here, where the completeness of your master data are not ready as well, right? So most of the errors we have seen is really related to, in Malaysia, required to have your TIN number of your buyer, your customers, and all these informations are not ready. And if they are ready, they are the numbers are incorrect, right? So that throw out a lot of this error when we submit this data to LHDN, and LHDN will reject these invoices, and you have to correct it and resubmit again. So give yourself sufficient time, even though we don't have much time left now, even into the second wave, 1st of January. But for you who are having some entities that on third wave, which is the 1st of July, always consider starting early, not just Malaysia mandate, subsequent moving into Singapore and other globally as well. So that is our recommendations. Okay. Maybe move on to the next slides. Yeah, so just to wrap it up, right? This slide is to emphasize don't underestimate the changes that are coming in every jurisdictions, right? In APAC alone, we already see in 2024, it's already there are 22 notifications or changes coming from different countries. And it will be increasing, right? And even though we have not matched up to what the Latin America is doing on a daily or weekly, there are changes. But with Malaysia e-invoicing and Singapore e-invoicing kicks in, there will be a lot more. So the key thing is not just to get started, but how to stay compliant throughout your journey when we switch on e-invoicing for you as well. All right. Thank you. Move on to the next slide.
Okay. Hi, this is Richard. That brings us nicely to a next polling question. Can we ask you please to take a look at the options you got in front of you there, and what is your biggest challenge relating to e-invoicing implementations? You can choose more than one. So those are keeping up with the new and changing regulations, buy-in from other stakeholders, completeness of tax data, complicated IC structuring, and so on. And while we're waiting for the vote, very quickly, maybe Raymond, a quick question. In your experience going through the Malaysia implementation, what did you see as the biggest challenge for some of the businesses you were working with?
Yeah, one of them I've addressed early on slide is really related to the readiness in terms of having started earlier so that they have clean master data. That is the biggest challenges we've seen. But the other aspect, I think, don't also estimate the operational side or the administration side of things as well, right? In Malaysia, there's this onboarding of e-invoicing before you go live on the productions. There's a requirement for you to go into the tax portal and start to select, are you directly sending these invoices or via a service provider? So you have to do it. You have to find out who are your directors that can log into the tax portal. So these are the awareness upfront, and onboarding is one of the administrations or operational challenges that the client has faced as well. Yeah.
Excellent. Thank you, Raymond. Okay, I can see the results in now, and I would seem that by far the biggest issue is just keeping up with the regulations, and I think that's an experience we can all relate with, not only for Malaysia but other jurisdictions as well, where we know the rules change fast and mandates come and mandates go. So I think we can all resonate with that. Along the second one, I think, is the complicated IT structure and just managing your own internal systems to be able to make sure that you capture all of the data flows and are all ready to go live. So thank you for the voting there. Let's move on to the next section, and I'm going to ask Staggy to pick up this point and talk us through how we prepare your organization and how to manage a project.
Sure, thanks, Richard. Just next slide, please. Great. So I guess first and foremost, I probably wanted to flag the team that's required for this. And maybe I'll preface with saying not in every business you'll need all 5 functions working together. There may be a different combination of people that you would need to involve. But really there's usually multiple stakeholders that need to be in the project. And each stakeholder will have a unique perspective and role to play within the team that will ultimately be crucial to ensuring that the rollout is successful. So first, it's important to assign a leading department and perhaps even a specific stakeholder who will take ownership of the project. So if this is the first time you're running an e-invoicing project, and I saw a few hands there in the poll that said that they don't have a provider or they're looking for one, maybe think about who in the business would have the capability and expertise to manage this going forward, because it's not only this one project, today. There are going to be changes, there are going to be new regulations going forward, but also to ensure that the approach can be replicated when new countries introduce mandatory requirements, for example. So, maybe let's say if you are operating in Malaysia and you only assign a Malaysian team, but you also have operations in Singapore, and suddenly all your capability is in Malaysia only. So perhaps have someone that's central across or cross-regional. I'll give you an example, about leading a project. In some cases, we see, IT can be responsible as the main department, and you have someone like a financial systems analyst in the lead role, and they act as that bridge between your IT systems and also the end users in the finance team who actually send the invoices or process inbound invoices. And during the project, it's also imperative to ensure that the right stakeholders from the business are included. So think about the teams that interact with your suppliers and your customers, so maybe your sales teams, your procurement teams, and others that need to be aware of when there are changes, and also that can provide valuable insights when you are making process changes. So next slide, please. So when you're dealing with e-invoicing and CTC compliance requirements, there are kind of two distinct areas to bridge the gap between. You need to think about how to adhere to the regulatory and business requirements that you're facing, whilst at the same time ensuring that internal and external stakeholder requirements are maintained or updated. So each of these has their own legal, business, and strategic implications. And I guess to just break them down one by one, I'll touch on each briefly. So from left to right, really, format requirements. You would know that not all countries use the same model or e-invoicing formats. For example, we spoke about Malaysia that uses a clearance model, and Singapore uses the 5-corner model. They're different formats with PEPL in Singapore, for example, and given there's so many different formats and models, it's important to consider the approach you take with your internal invoice format and with your internal systems. Then you have the content requirement. So similar to the format, each country will have some fields that are unique to them. We heard about the TIN data in Malaysia that was missing for a lot of companies, and one thing that's often overlooked is how often governments change content requirements as well. So, perhaps you implemented a solution and it's all working today. What gives you the knowledge or the comfort that tomorrow, if the government decides to change their requirements, how do you handle that? You also have your platforms and portals to interact with. So there's kind of two facets to this. One is the governmental platforms that are bespoke for each country. And then the other side is your trading partner platform. So do they use a particular portal? How are invoices submitted there? Do you use a particular portal for your supplier invoices? Right? So if you change the content or the format, does it still work for the other platform? And then you have the archiving requirements. So there's country-specific retention periods. There's obviously cybersecurity requirements. Some countries only allow you to archive within country. So there's all these different facets that you need to consider as well. And then going to the other side, you really need to consider your internal stakeholders. We sort of touched on that in the previous slide. But making sure that all invoices are valid from a tax perspective, for example, that they integrate with your systems, that the stakeholders in your business are satisfied with the changes as they are relative to their function. And then with your trading partners and the tax administrations, you need to consider if your new processes impact suppliers and how they submit their invoices. Do your customers know that your invoice format might change? You will need to communicate that in some way, shape, or form. Also, when e-invoicing and CTC requirements become mandatory, they usually have an impact on requirements and regulations from a tax authority perspective. So you need to know that you have the right information and the right advice, that you are on top of it all. And last but not least, it's your advisors and software vendors, right? So they are involved within your systems. They are embedded within your organization as well, whilst there's external. And there's a big impact in this space because your e-invoicing requirements are constantly evolving. And what we see sometimes is the ERP provider isn't ready with the right information, for example. Or the systems integrators that they're using, they might not know how to integrate a governmental platform. So you need to ensure that all of these and your consultants are all on the same page. And I think, Sion mentioned that previously as well as a big challenge that happened in Malaysia. So whilst there are many considerations to keep in mind, this doesn't mean that embarking on an e-invoicing project is just one big compliance exercise. But in fact, e-invoicing in many countries is introduced on a voluntary basis initially due to the opportunity that it presents to businesses and to the wider economy. And with that, I'll pass on to Su Yong for the next slide to take you through some of the benefits.
Thank you, Sagi. If we move on, right, so on this slide, basically, what we want to then also showcase, as Sagi mentioned, there are a lot of consideration that needs to be put in place for an e-invoicing implementation. However, if we look at the flip side, there are a lot of benefits that an e-invoicing project can bring to the wider business. Now, the 4 categories that we've listed in this on this slide, one is obviously to improve data quality. As mentioned previously, data was definitely one of the key lessons learned. The other aspect is around automation streamlining. Third one is around cost reduction. And then the last category is risk reduction as well. Now, if we look at the data quality and automation, a lot of the points that I mentioned on this slide are interlinked or dependent to each other. Now, if we have the completeness and correctness of data within the ERP system or systems that are used for billing, for example, procurement, for example, there are a lot of automation that can be put in place to then ensure the streamlining of all the business processes as well. So a good example, and that was also being highlighted from the Singapore requirement, if you actually do have the 4 corner and going forward, the 5th corner in place, invoice exchanges between your supplier and customer can then be automated. Everything can then be tracked. The payment can then be quicker turnaround as well when everything automated and within the system as well. Now, with everything available within the system, with automation in place, what can then also happen within the team structure is the shift of responsibility. Things that you need to do, for example, will then be shorter timeline, and therefore it spares up people's time to then do a bit more value-added activities. So you are not looking through line-by-line transaction, for example, to prepare for your return. That is definitely then a good example. Now, with the time needed to then prepare sort of like a return, it will definitely reduce the cost needed for an individual, for an FTE to then work on these aspects. And then lastly, with everything automated, it will definitely reduce the manual intervention and therefore reduce the potential error that could happen as well. Additional 0 when implementing or typing an invoice is definitely a risk that needs to be eliminated for sure. Now, if we then move on to the next slide, what we want to then showcase is an example of an end-to-end implementation and the different parties that are involved. One of the key lessons learned that was mentioned previously was a clear communication. And as what Sagi said as well, there are a lot of teams that needs to be involved for an implementation of an e-invoice. A typical end-to-end project and phases that we've seen is as shown on this slide. Now, usually, if you are unaware of which solution to go for, which is one of our poll question earlier, what tend to happen on the phase 0 or phase 1 or the step 1 is the vendor assessment. Even if you have an e-invoicing solution, what we can then help you is then to help you understand which are the vendor that can actually support you on most of the countries. Bear in mind that there will be certain jurisdiction that might need local support or local entity support. However, from Pagero's point of view, obviously they can then cover a lot more countries and a lot more jurisdiction that actually has the e-invoicing mandate. So the step one, it typically starts with a vendor assessment, which part you want to go for. Now we follow on with understanding the requirement. Here at this stage, typically are led by Deloitte alongside with your organization as well, making sure that there is awareness internally, and then understand what are the potential impact to the business stream, business processes as well. And that goes on to the next step as well. And then before an implementation of a solution, what needs to then set in place is a strategy. What will then be the approach for the e-invoicing? What are the solutions that needs to be implemented, to be considered? What are the ERP or IT landscapes, which is also one of the comments that we've seen a lot of you that has voted. You have a lot of or complicated IT landscape. So which one will then be impacted? And then the last three phases will then be a joint effort between Deloitte, yourself, and also Pagero, as it involves the implementation of the solution itself. Maybe Sagi, you want to then also chip in as well in terms of the activities that are needed from a Pagero jointly with Deloitte on these last steps.
Yes, absolutely, and I think we could probably also be fairly well involved in the strategy definition. We often see mandates ahead of time, get the news as well, so can understand from a technical standpoint which countries are easier to implement or should be implemented together if we're going for a global approach. And I guess through the implementation scenario, we perform a gap analysis to ensure that you have all the right content requirements. If you don't necessarily have that, that's things that need to be built in. There's obviously test scenarios that we assist you with undertaking, and of course going through the full go live and hypercare period, ensuring that it's a successful implementation. But I guess that probably, and I'll be short because we're close to the end, on the maintenance, and that's really important. This is where probably Pagero and Deloitte fit in the best way possible, is continuing to monitor the environment, understanding what regulations are upcoming, both from an e-invoicing and a tax implication for you, and then communicating that forward to our partners, to our clients, and ensuring that you're staying ahead of the game, that you are in time for different e-invoicing mandates, and that you do have the right content, you do have the right connectivity within your systems.
Okay, I think that brings us to the end of the formal piece of the presentation. Now we move into the Q&A session. Thank you to all of you who have submitted questions through. I'd like to start with a question which I think we've sort of covered, but I would like to just tease it out a little bit more, and maybe I'll start with Sagi, and perhaps we can pass it on to Suyong thereafter. And that is around the who looks after one of these projects. So Sagi, in your slide, then you covered off the departments that you would typically see. Do you see a best practice for who ought to lead one of these projects, or is it really a case by case?
Look, I would say it's often a case by case, and it depends on the company. I guess it depends on the strategy behind it, right? So I mean, if you look at a multinational company that has operations in 10 plus e-invoicing compliance or CTC compliance jurisdictions, you'd really want to centralize that somewhere. That should probably sit with likely IT with support from finance. But for example, if you are a business that operates in Malaysia only, right, and you have this requirement in Malaysia right now, perhaps finance can lead it rather than IT. It really depends. I've seen it where tax leads it at times. it's, there's no role as e-invoicing implementation expert in a business. So, you have to figure out who has the right skill set internally to tackle this.
Yeah, yeah, thanks. And Su Yong, I guess, drawing on that point, are there some, recommendations? Obviously, a lot of the audience here is tax. What do we say to our tax professionals to make sure that one of these implementations runs as well as possible?
Definitely ensure that yourself are within that committee, that e-invoicing committee, if there is one. Now, concurring to what Sagi said as well, different entities or different organization will then have different approach, but nevertheless, tax should definitely be one of the key stakeholder, because there will then be tax element in there, and in compliance of e-invoicing, tax will then be the one that will be penalized.
Yeah, absolutely. Okay, thank you. This question may be very general, but I think a good place to start. So, how long does it take to implement an e-invoicing project? Maybe Su Yong, you can cover that, and perhaps I'll ask Raymond to comment too. But Su Yong first.
Yeah, so an ideal implementation timeline should then be at least 8 to 12 weeks. That will then give ample time to all the impacted stream to be prepared and adapt to any of the changes. However, as what Raymond has previously mentioned as well, Malaysia was then a good example where client will then only reach out beginning of July or even mid of July to then be able or want to go live 1st of August. So we've seen that extreme, but definitely 8 to 12 weeks will then be an ample time, a more calmer timeline for an implementation for e-invoicing. But Raymond, what do you think?
Yeah, I think also, thanks. I think also depending on the scale and the countries involved as well. So generally, yes, 8 to 12 weeks. But if you're looking across multiple jurisdictions, which want to bring in as phase 1, phase 2, I think that has to take definitely a longer period. But yeah, we have done this many times, and we will help you to look exactly what are the timeline. But the gauge of 8 to 12 weeks is a good gauge for one country. Yeah.
Thanks both. So I guess the the $1 million question on everybody's lips, that do we have a good take on how much an implementation would cost? Maybe Sagi, what's our view on that?
Yeah, Pagero side. So really from an implementation standpoint, it depends on the scope of the project and how big or small it is. But really, the components that are included, there's 3 components. One is the implementation cost, so it's getting everything set up. The second is your annual licenses that are dependent on which countries they are, what services you use. Do you need to archive documents, for example? And then the third cost is your transaction cost, so your volume of invoices outgoing or inbound, depending on the scope of the project. Now, one of the really key things from our standpoint at Pagero that we're very proud of is that the initial setup cost really sets you up on the platform, and then to actually scale, it becomes much more cost effective as well as you go. So as you add entities, as you add countries, once you're ready on the platform, it's much easier and more cost effective to scale up.
Okay, thank you, Sagi. Okay, I'm mindful of time, so I think that's really all of the time that we've got available for the questions. So, Su Yong, Raymond, Sagi, thank you for your contributions. Special thanks to all of you in the audience who were able to join us today. Please do fill out the short survey that will pop up on the screen shortly, and tell us what you think of today's program. If you joined us late, then please note that you can find the presentation on our archive site for future viewing. And if you think others would benefit from the webcast, then please do share it with them via the share this icon, or let them visit the Dbrief website. With regard to the questions, we will answer all of the questions that were submitted during the webcast. Just give us a couple of weeks to get those back out to all of you. Also, if you think of other questions or comments after the webcast, then please do reach out to me or any of the other speakers, and we'll be very happy to get in touch with you. Lastly, please don't forget to tune into our next scheduled webcast, which is from our Global Mobility Talent and Rewards series on the 24th of October, which is titled Recharges for Share-Based Compensation, an Asia-Pacific Perspective. Lastly, from all of us at Deloitte, thank you for participating in Deloitte's Asia-Pacific Tax webcast today. Goodbye.